First up on the show today, the Hosteller, which is India's leading backpack hostel brand, announced the completion of a Series A fundraising round where they have secured a total investment of 48 crore rupees. Let's understand what they plan to use this towards, how do they plan to survive in a competitive market, and what the long-term game plan is. Pranav Dangi is the founder and CEO now joining in. Thank you for taking time out. To begin with, let's talk about this fresh capital and how you plan to accelerate your expansion with it. What's the game plan for the utilization of funds?
Sure, sure. So, as you know, the Hosteller is India's largest chain of backpacker hostels. We had built this brand post-COVID specifically on the funds that we raised through different models. However, we were in the lookout to raise our Series A round, which we initially kept at around 60 crore, but then we were able to raise a 48 crore rupee round. It's a mix of equity and debt. We have raised 32 crore in equity and 16 crore in debt. Uh, the use of these funds would be 100% towards growth and expansion. We are roughly at around 60 locations today, and with this use of this money, we think that we'll add another 75 to 100 more locations. We are a EBITDA positive company, so we don't need any money for the burn. However, as I said, the entire usage of funds is towards the growth and expansion of the brand.
Right, but Pranav, while the sector has received quite a bit of funding, I understand that a lot of hostel businesses in India are finding long-term survival very hard, or they're moving towards a more premium offering. They're trying their hand at homestays. What makes you confident that you will be able to sustain and then thrive?
So see, we are the category creators. Back in 2015, when we opened the company, a category called as backpacker hostel did not really exist in the market. Today, we are the market leader in this category, and the confidence lies behind the fact that in India specifically, anything that is offered at a price below 1,000 rupee per day is either not infrastructurally solid or does not provide a great hospitality experience. However, in our case, we have been able to crack that price point where any customers pays us less than 1,000 rupee and he still gets the services of if I have to compare, maybe comparable to a four-star or a three-star or a four-star hotel. So the price point works has worked in our favor. The brand has a lot of affinity. We have upwards of 35% as a repeat ratio. Uh, People choose us for almost 10 times in a year. It's not that they choose us only for the first or the second time. So the brand has a great recall. The category has a great recall, and that is why we are very bullish that in the next few years, this particular category is going to become the second largest in the country after hotels.
Sure. And what about the competitive intensity? There's the 10-year-old Zostel, which is one of the largest chains of branded hotels in the country. There's Artbuzz, Ghost Stops, etc. How do you plan to deal with the competitive intensity?
So as I said, we are the largest. We are larger than Zostel or Artbuzz or any other player in the market. We currently hold roughly 3,000 beds. We plan to take it to 10,000 beds by the end of 2025. Thereby, we'll be going for another fundraise, and the plan are that in the next 5 years or so, we want to be more than 25,000 beds pan India.
Absolutely. Right. So, what about your long-term game plan then? 10,000 beds by March 2026. What are you at currently? How many locations are you operating in? Do you plan to expand to more metro destinations or tourist destinations?
Sure. So we have a healthy mix in our portfolio right now. So if I have to give you a ratio, 90% of our properties are in travel destinations. We have a 10% portfolio which is spread over tier one cities like Delhi, Bangalore, Jaipur, Dehradun, and cities like those. We still believe that India is still progressing towards taking one trip per month. But still, if that is achieved, I think there will be a lot of travel that will happen to travel destinations, and that is our focus. We want to maintain this ratio of 80-20 or 90-10, favoring travel destinations as well as tier 1, tier 2 cities. So we are in Bangalore. We have almost 300 rooms now in Bangalore. Delhi, we are going to have 250 rooms very soon. So these are very big markets. Goa is another big market for us, which we already have 7 to 8 properties over there now. And we think that the market is big enough to accommodate 25 more properties. So these are some big markets, but yes, there are a lot of newer destinations that are coming up each quarter, each year, and we are in a very good position to capture all those locations as well.
And what is the outlook when it comes to your overall growth plans down the line? What is it that you're penciling in?
So the growth plan is, as I said, from 2,500, 3,000 beds today, we want to scale 10x and reach 25,000 beds. The day we do 25,000 beds, I think we'll be IPO ready. And the long-term vision is that in the next 5 years or so, we want to go for an IPO because the business is quite solid. It has good operational as well as net margins, and we can create a lot of value for public investors as well as private investors.
All right, thanks so much for joining in.
If you like this video, then like, share and subscribe to ET Now.